Good morning. My name is Nobody Fatai. On behalf of Group FC, I'm here to talk about a topic. The EU remains China's largest trading partner, with trade disputes over electric vehicles and dairy products. Why Nigeria is pursuing trade opportunities through the African Continental Free Trade Area? Should Nigeria focus on strengthening trade ties with EU to diversify its national income sources, or it should prioritize intra-African trade under AfCFTA? Certainly, below is an extensive essay addressing whether Nigeria should focus on strengthening trade ties with the EU or prioritize intra-African trade under the African Continental Free Trade Area, using the expenditure approach to GDP to structure the argument. Nigeria, Africa's most populous nation and one of its largest economies, faces the strategic challenge of diversifying its national income sources beyond crude oil. In this pursuit, international trade plays a crucial role. Currently, Nigeria is exploring two main pathways to trade-driven economic growth: strengthening economic ties with the European Union, its long-standing trade partner, and leveraging the African Continental Free Trade Area to boost regional trade. This paper evaluates these two options using the expenditure approach to gross domestic product (GDP), which defines GDP as GDP is equals to C plus I plus G plus bracket S minus M, where C is equals to private consumption, I is equals to gross investment, G is equals to government expenditure, and X is equals to export, and M is equals to import. Focusing on the components most directly influenced by trade consumption, which is C, then I, investments. This analysis argued that Nigeria should prioritize strategic engagement with EU in the short to medium term, which simultaneously strengthen inter-African trade under AfCFTA for long-term structural transformation.
Trade with the European Union, leveraging consumption, investment, and net exports. The European Union remains Nigeria's largest trading partner, accounting for significant volumes of both imports and exports. Trade with the European Union offers potential advantages across all three relevant components of the GDP. The first one, private consumption, which is denoted by C. Trade liberalization with the European Union allows Nigeria to import a wide variety of consumer goods from pharmaceuticals and electronics to food products and machineries. It increases variety and availability of goods, can enhance consumer welfare. Imports from European Union are often high quality and competitively priced due to economies of scale and efficient supply chains. Consumer benefits from lower prices and improved standards, potentially increasing real income and overall consumption levels. However, the risk is that excessive importation of finished goods without commensurate growth in local industries may undermine domestic producers. This could cause job losses, particularly in agriculture and light manufacturing, reducing household income and negatively affecting C in the longer term. The second one, gross investment, which is denoted by high. Stronger trade ties with the EU tend to attract foreign direct investment, which is the FDI, especially in sectors aligned with EU priorities, such as green energy, technology, manufacturing, and infrastructure. The EU investors often bring with them not just capital, but also technical expertise, innovation, and managerial skills, improving Nigeria's productive capacities. Investment in infrastructure and industry can create jobs and enhance productivity. The FDI sector, like renewable energies and agro-processing, can also promote sustainable development. The third one, which is the next export, denoted by the X to M. Exports in Nigeria to the EU are heavily concentrated on crude oil and raw materials. While this contributes to a trade imbalance, there are still other opportunities that could be explored. The first one, diversifying its exports to include agricultural goods like cocoa and cashew, textile and services, etc. Reducing non-tariff barriers and improving quality standards could allow Nigeria to access niche markets in Europe, such as the organic food or digital services. The third one, strategic import of machinery and inputs may increase short-term hem, but also enable long-term increase in X. by improving productive capacities. Therefore, if well managed, European trade could help Nigeria move from a primary commodity exporter to a more value-added exporter, improving the X to M balance over time.
Intra-African trade under AfCFTA, a long-term vision. The AfCFTA offers Nigerians the opportunity to trade within a large unified African market comprising over 1.4 billion people and a combined GDP of over $3.4 trillion. While still in early stages, AfCFTA has the potential to reshape Nigeria's economic structure through the following ways. Consumption, which is denoted by C. Intra-African trade under AfCFTA can support the growth of local industries and small and medium-sized enterprise by providing them with access to regional markets. As local business expand, employment increases, raising household incomes and improving consumptions. Unlike AU imports, intra-African goods are more likely to be locally sourced or processed, which reduces dependency and supports the domestic economy. Consumer benefits from more affordable locally made alternatives, supporting inclusive growth. Thus, AfCFTA can promote broad-based consumption growth, especially among lower and middle-income households. Second point, investment, which is donated by I. AfCFTA promotes regional value chains, which can attract investments in light manufacturing, logistics, agro-processing, and services. Regional harmonization of policies encourage cross-border infrastructure development, such as transportation corridor and digital networks. Nigerian businesses may find lower barrier to entry and reduce competition in regional markets compared to the EU. Local and regional investors may be more attuned to African markets, offering tailored capital and support. Though the investment volume may initially be smaller than AU, FDI, they are more likely to be sustainable and inclusive. Net exports. Currently, intra-African trade accounts for only 15 to 17% of total African trade, compared to over 60% in Europe. However, AfCFTA aims to change this by reducing tariffs and eliminating non-tariff barriers, facilitating trade in semi-finished and final products that are often unsuitable for developed markets, encouraging regional specialization and complementary production.
Good evening. My name is Brian Mignola. In conclusion to the topic, Nigeria's path to sustainable economic development and natural income diversification lies in strategically balance in its international trade policy. The expenditure approach to GPS shows that trade policy with the EU has potential to quickly raise investment, consumption, and exports, thus providing a platform for robust economic growth. In conclusion, Nigeria should prioritize strategic trade with the EU to stimulate immediate economic growth while laying the groundwork for regional integration under AfCFTA, thereby maximizing the benefits of all key components C, I, and X to M in the national income framework.